Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be our daily cryptocurrency market update video. I hope you've all had a happy Monday so far. We're going to be diving into Bitcoin. We're going to be diving into the broader sort of macro economy and the outlook that we have for it. I want to start things off by talking about September and how September is typically the worst month of the year for the stock market. You know, if you look, and there's been books, entire books wrote on this that don't just go into month by month, but week by week, year by year, talk about 4-year cycle theory, not applying to Bitcoin, but generally the election cycles and, of course, seasonality and how that impacts the stock market. And there are patterns there. And September is typically the worst month of the year for stocks. We know that Bitcoin is very correlated. And in actual fact, I was discussing with my Patreon members in yesterday's meeting that typically, and this could be why we're having the sell-off that we're having now going into September, people will position before the month of September. So it's a bleak outlook across the board, guys. Something we've been saying for months and months on end now, really, since the first couple of months of this year. We weren't the earliest to it. You know, many people were calling the alarms in November. But we have a really bleak situation ahead of us. And the real issue that I think we've got moving forwards is the energy crisis in Europe and I think the UK. This is an issue that I don't think is really being fully priced in, because it looks pretty darn bad. Europe faces terrible winter for the next 5 to 10 years without gas price cap, minister warns. So even if you were to cap gas prices, there's a whole load of issues that come as a result of that. You know, and we're going to talk about Bitcoin, guys. We're going to be getting into Bitcoin. We're going to be looking at the Asian market, how that opened, the UK market, how that opened, and looking at the US stock futures. And then, of course, at 2:30 UK time, we've got the actual stock market opening. And that's going to be really directional for the crypto market. But talking about, you know, capping prices and then talking about what I think they're actually going to have to do in Europe and the UK is subsidize energy bills, which means the government's going to have to print money to give to people so they can actually afford their energy bills. Otherwise, people are just simply aren't going to pay it, and there's going to be larger systematic failure. But the problem with that is, and this is a saying that has really stuck with me throughout my career and my kind of outlook on life. When you try and put equality before liberty, you end up with neither. So you need to put an individual's, you know, liberty, sort of sovereignty in front of equality, because how equality works in the kind of modern world is you take from one person and give it to another, and that's called fair. You know, life isn't fair, unfortunately, and there's no perfect. And I'm not saying for one second that the government shouldn't come in and, you know, help people out that need it. But the real issue is years prior, how we've got into this mess where we actually need and are that dependent on the government to sort of solve our issues. And this, I really do believe that going into winter, and it's something that we've been stressing day in, day out on this channel. I know some of you feel like it's Groundhog Day, but I really do believe that going into winter, we are going to face some really tough times in Europe and the UK, and actually across the board. We're seeing lots going on with China. You know, this is our main stance and has been our main stance when we look at the cryptocurrency market. We are believers in this space as a technological revolution. We really do believe it's going to change the world. However, we understand what's in front of us, and we understand that markets are somewhat separate from the technology that, you know, or the asset that they're trying to represent. There, of course, are correlations there and representations there, but they are separate in regards to the fact that the underlying asset doesn't dictate the price, rather the price dictates the price, and people dictate the price. And when you end up in a situation, and I showed this yesterday, and I don't think people really took it that serious that I was showing this, and really what I was trying to highlight is this is the German saving ratio. You can see it shot up after March 2020 as they printed a load of money, and markets did the same thing, and then now look at where we are. This is going to be echoed throughout the entirety of Europe. It's going to be echoed in the UK, the US, you know, across the board, guys. Australia, potentially a little bit less so because they have quite a rich sort of energy outlook, I guess you could say. But this is really all you need to know moving forwards for the next sort of 3 to 6 months, is that if people are poorer, if everyone's broke, no one's going to be putting money into markets. So they have to choose between paying their energy bills and keeping the lights on, or having to buy Bitcoin it's a no-brainer what they're going to choose. And you don't just have inflationary pressures, which we're seeing really kill off savings ratios and wealth in the sort of retail sector, but we also have high interest rates. And Jerome Powell actually drilled home the fact that they're going to persist with these high interest rates, they're going to continue to do them, and they're going to not let up, and they are, you know, firmly fixed on fighting inflation. They're going to do that by basically any means necessary. They don't care about the stock market or the crypto market. They care about bringing price stability back, and they're going to do that through upping interest rates to try and kill off demand so that demand falls in line with supply, and then there's some sort of balance there. The real problem with that is I think they're going to break something in doing that. Happens every time. We had the yield curve. I'll show you guys. There's so much I can talk about, and I really do recommend that at the start of next month, people join my Patreon, because we go into all this stuff. You know, I know it's 30 quid a month, but I think that's a fair price for the sort of value that we put out and the things that we go into and try and teach. Let me pull up the yield curve. So what have we got here? So here we are. We've got the yield curve. Just bear with me 1 second, guys. I didn't plan on showing this, but I just really want to stress this point. This yield curve has essentially predicted every single catastrophic crash in the equity market, in the economy probably broadly. The last one that we had before we had March 2020 was 6 months prior. This had everything to do with the repo market. We've not actually had the crash and the fallout. And people go, okay, well, we're already significantly down, but we haven't had that Lehman's moment yet. And that's the concern for me moving forwards, is that that moment is still yet to come. And do you want to be invested in markets when that arises? And I've said continuously, moving away from that throughout this entire rally, really since here, guys, all the videos are still up. You know, it's not a positive and bright outlook that we have for the crypto market being a market that's moved from liquidity, and liquidity is becoming scarce. Why do you think the dollar's catching a bid? That tells you everything you need to know about liquidity. When the dollar's going up in terms of value, that's because people are bidding it up. Why are they getting into dollars? Typically for a safety trade. And this is what we're seeing. And the dollar's actually doing quite well today. Talking about the UK market, just using the FTSE as an example, isn't doing brilliantly. The Asian market isn't doing too well, but there's lots going on internally with China at the moment. That's going to have a broad overspill. What else do we want to look at as a sort of broad indicator of overall markets? We can see that the futures market hasn't really done a lot. I've been watching this since last night. I think this is waiting for the actual market to open. I think crypto is also doing that and kind of keeping its head above water nominally. Talking about Bitcoin and its structure, I don't want to kind of keep jumping around all over the place, but I'm kind of pushed for time today, and I want to try and uncover as much as possible with you guys. You're naturally going to see some sort of reaction here. The thing that we really highlighted was this big, thick red line is, and I want to drop down, essentially, you know, yesterday we were looking at this and we were going, this isn't strength. This is your 20K top from 2017. This is not strength. Learn to read candles and what they tell you in regards to price action. You know, pair volume up with that. This is not strength. The issue you've had is you've spilt, and now look at what you're doing. You're not breaking back above what was support and has been support on numerous occasions. You're now acting as resistance here. And I do think that traders, I'm in touch with lots of traders, I speak to them daily about ideas and stuff like that, will try and bid this up from a day trading perspective. The issue that you've got is, forget everything we spoke about what's coming down the road into winter, is if the US market, opens negatively, which given the futures market, given the UK market, given the Asian market, given the dollar, which is down slightly, but I think it will reassert as the day goes on. You know, if this opens up negatively, that's going to echo forward and echo forth into the crypto space, and you're going to see a further roll. And the problem that you've got is all of your believers that were telling you, and I'm not going to call anybody out here, but you know the YouTubers out there that are saying it, and the guys on Twitter that were calling this a generational bottom entry, and, you know, this was saying it was, and that was saying it was, have failed to realize that there's never been Bitcoin has never had to go through this in its history. We spoke about this at great length. But the problem you've got is what happens when you now come and take this low out. That causes, how many people do you think have got stops down here or stops here? That's going to cause that further continuation to the downside. That's without something major happening. That's just price action sort of falling off of its own weight. So there's lots going on going into September. This is interesting and still something that we're going to continue to share. A quick word on Mt. Gox. So lots of things, I actually think I shared it, but it was complete nonsense. Someone talking about how Mt. Gox are going to release all their Bitcoin this week. There's been quite a few people who are creditors. This is Marshall Hayner, not somebody who I'm familiar with, but I've certainly I wanted to find a tweet for you guys, so I just typed in Mt. Gox in regards to what's going on here, and it's saying, I'm a creditor of Mt. Gox and I can confirm we are not close to receiving our Bitcoin. Most people like me also have no intention of selling it. Don't believe what influencers on Twitter say. No, I would 100% disagree that most people will 100% sell their Bitcoin. I would say the majority would sell their Bitcoin. If you bought Bitcoin at whatever it was, $300 or so back then, and you got it today, you're going to sell. I guarantee it. Most people like me, so maybe people like him won't sell it, but the majority of people that get this Mt. Gox release will sell whenever that happens. I'm not saying that's going to happen anytime soon. You also have Jordan Belford here weighing in on the fact, and I agree with him, that low cap gems, or low cap, I'm not going to call them gem cryptos, are like penny stocks. It's really when the tide washes out that you see who's been swimming in the sea naked. And let me tell you guys, I'm shocked. I mean, even I was a believer in some of these altcoins. And then when you kind of see things unravel, you go, wow, these really are like penny stocks that are just, there's nothing behind them other than, it's kind of like people putting .com at the end of their name. I wouldn't trust Jordan Belford's trading advice. I don't believe he's a trader. He's a stockbroker. I don't think a trader could go out and do the sort of things that he did when he was making all that money. I think traders, they have to be more like athletes and very sort of stoic in their approach, just simply because you're making weighty decisions on a day-to-day basis. So what are we looking at moving forwards? Well, we know, let's not go into the European energy crisis and all that. That's coming down the road. That gives us a bearish outlook. Let's just focus on the here and now. Let's see how the US market opens. Does crypto rally into it potentially? US market opens down. Expect that to be echoed into the cryptocurrency market. Also got yields climbing back up. Given how the UK, Asian, futures, bond market is opened up, I would expect more downside for the cryptocurrency market. And this is what we're now doing as cryptocurrency investors. We're doing cross analysis. We have to do that in order to understand where our space is going, because the correlations are as clear as night and day there, I'm afraid. So that's really all I've got for you in this video, guys. If you've enjoyed this content, a like is always appreciated, so is a comment. And I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching. Have an amazing Monday, and I'll catch you in the next one.